Hi, I'm Jessica Amir for the Finance News Network. Joining us now from Corp Group is CEO Thomas Beregi. Thomas, welcome.
Thank you.
First up, for investors new to the company, could you please give us an introduction?
Yes, Corp was a company that listed in 2000. Our core business is debt purchasing, so we buy charged off or defaulted credit cards, personal loans and telephone accounts from major banks and utilities, and what we do is we seek to collect those accounts over a number of years, enough to cover our costs and make a return for our shareholders. We're also a significant consumer lender here in Australia as well, so we've branched into that business, and we do our debt purchasing both in Australia and New Zealand.
Turning to financials now, Thomas, what were some of the highlights from FY17?
I guess the key highlight was we grew our profits by 20% over the prior year, so very strong profit growth. And that marked 9 years of consistent profit growth, where the compound average growth recorded was about 28% per annum over that period. So very strong performance with a very solid return on equity of 24% in 2017, and some really strong highlights in some of our businesses. In particular, our lending business doubled its profits to 12 million, so a really strong result and really showing that business is performing well. And our operation in the US started to break even at the end of the year, so it's now on track for profits.
And Thomas, just honing in now on your key business segment, starting with Australia and New Zealand debt buying. Tell us a little bit more about that.
Well, that's our biggest business. It accounts for 65% of our profits, a bit over 65%. And in that business, we have some really strong metrics. So our asset turnover, the way we convert our debts into cash, is among the strongest in the world, probably double the rate of many of our local and international listed competitors, and some of the strongest collection efficiency, so the lowest cost to collect that we see in our industry. So a really strong business where we've established great leadership.
And now tell us about the broader lending market for Australia and New Zealand.
Yeah, so our lending business is something we started organically 5 years ago. We were a pure debt buyer prior to that, and the book has grown really strongly. It's now our $160 million book, and it's on track to make almost 30% of our earnings in the years ahead. And one of the great things about our lending business, as everyone knows, is financial services and credit markets are under a lot of regulatory scrutiny. Our product ticks all the boxes. It's a really sustainable product, some of the lowest rates in our consumer segment. And as stakeholders and regulators are showing more and more scrutiny over operators, our product is really coming through very strongly and a great consumer proposition, and so it's growing very well.
And lastly, Thomas, tell us about your US debt buying business.
We started our US debt buying business also about 5 years ago, and over the last few years, market conditions there have not been great. Prices of charged off debts have been too high. During that period, we've focused on improving the efficiency of our business. Last year, we improved our productivity by 20%, and the good news for us now is that market conditions are now far more favourable, and we're accelerating our growth there. We're buying more heavily, and in fact, we're focusing a lot of our investment in the US now, and that will turn a profit in 2018.
And Thomas, a more general question now about strategy. What are you focused on, and tell us how that's progressing?
Look, our focus is on having really strong operational businesses, so we're always trying to improve what we're doing to make sure we stay ahead of the competition. And we've adopted this strategy of diversifying into different businesses, moving into the US, as I've discussed, and moving into consumer lending, because we know there are times, particularly in our sort of business, where prices get too high, where things get overheated, and that enables us to ensure we can continue to invest in and grow by withdrawing investment from one area and concentrating it in another. And that's effectively what is happening at the moment. Right here in Australia at the moment, prices of charged off debts are pretty high. The market's a bit overheated, and so we're reducing our purchasing in Australia. We're increasing it rapidly in the US, and we're also increasing our consumer lending. And that means we can continue to grow our earnings and make great returns in the years to come, whilst not being ill-disciplined and compromising returns.
Last question now, Thomas. What's your guidance for FY18?
We're guiding for profit growth in a range of 12 to 16%. That's net profit after tax of 64 million at the top end, so another solid result.
Well, Thomas Beregi, thank you so much for the update.
Thank you.